Hello and welcome to the DIY Investing YouTube channel. We are going through every stock in the S&P 500 doing a 5-minute stock analysis. This is my first 5 minutes of due diligence on these companies, and I'm breaking down what I see, what I'm thinking. Let's dive on in. Today we are discussing Advanced Micro Devices, otherwise known as AMD, stock ticker AMD. So this is a semiconductor company, and so first thing I want to know is, what is the business? Is it a high quality business? We do that from the business description. Company operates in two segments worldwide, and so they have computing and graphics and enterprise, embedded, and semi-custom. So they produce x87 microprocessors, that's Intel's microprocessors, as a celebrating processing unit chipsets. So basically they are building semiconductors. This goes into everything from GPUs, CPUs, system on a chip, microprocessors for desktops, AMD, all sorts of things, graphics cards. And so they serve the original equipment manufacturers, public cloud service providers, system integrators, all sorts of basic things. This is a worldwide semiconductor manufacturing company, $134 billion company. So beta's 1.87. That's extremely volatile. That means it's likely to be a little more cyclical. Not a good sign that it's so high, closer to 2 times the volatility of the index. And the share turnover, 1,272%. That means all of their shares are turning over 12 times in a single year. A big red flag to me about this company. And so the next thing I like to look at in the company is return on invested capital. And I can see just from looking at the photo without even seeing the numbers, I would never invest in this company because this is extremely cyclical. It's unstable. And you have many years in the last 20 years that are negative return on capital. That means they're losing money. How many years are they losing money in the last 20 years? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 of the last 20 years they've lost money. And what you see here is how much of the commodity business this is. And yes, look, 2020 they made a 50% return on invested capital. What this means is there's a shortage in the semiconductor industry, and so they can make a lot of money in a shortage being a commodity company. But because of that, because they're a cutthroat competition company, if there's not a shortage, they lose money or they have low returns on capital. So this business is, to me, uninvestable simply based on this. I'll do a little bit more deep dive, see if I can find anything redeeming. But immediately you see 10-year median returns negative or 5%. I mean, just bad returns. In addition to the fact that the PE ratio is 33 with these terrible returns, that's not good. The price to sales is 9, which is, again, extremely high valuation for a company that's not making money across the cycles. High EV to EBITDA is around the 40s. I mean, again, 7 is a good benchmark for what's cheap. This is extremely expensive and an extremely low quality company. The only reason you could invest in this company is if you thought the only years that are relevant are 2018 with a 15% rate return on invested capital, 11% in 2019, and 50% in 2020. If you think their entire business is going to just be like the last 3 years and they will never again have a loss, they will never again have a year with these terrible returns on capital, then it would make sense to consider investing in this company. But the margins are all over the place. They don't have stable gross margins. They go down from 44%, 22%, 37%, completely unstable. Again, you have negative operating margins. They're losing money in certain quarters. I mean, do they even have debt? Like what? So they do have long-term debt. It's relatively low. It looks like they've paid some of that off over the past few years. Cash flow. They have negative operating cash flow from operations. So again, I want to see positive cash flow from operations in every year for the last 10 years. With maybe an allowance for 1 year. But they lost money 4 years in a row from 2012 to 2015. And even then, this is a company with $134 billion market cap, and their highest cash flow from operations in the last, let's go to cash flow. The highest cash flow from operations in the last 10 years was the trailing 12 months with $3 billion. That's 40 times the highest cash flow from operations. So this is an incredibly overvalued company. Incredibly poor quality business, not predictable, not stable, very cyclical. and a straight pass for me. Don't forget to like this video, hit that subscribe button, and click on the bell in order to get notifications when I upload new videos, and stick around for more analysis of individual companies and breakdowns of how I think about investing.